Hi, Yoder here. I want to put together a quick video tutorial on one of the most important patterns, I believe, going forward, what I call the low-level base. Here we have a daily chart, Bank of America, and if we squish down, we can see, like many in the banking sector, this stock has just been decimated over really the last year or so, having trended down very, very powerfully throughout the later part of 2008 into 2009 as the banking crisis wound itself up into the near hysterical levels that we've seen. This particular stock has come down, and you can see how it decelerated after its initial drop in January, breaking down to new lows with less momentum each time than the previous time. Finally, we created a fairly decent low in the middle part of February. Then the market rallied up, made another lower high, came back and made a higher low. And that right there is a very important change. Then we had a breakaway gap to the upside, something we'll be talking about a little bit later. Usually as the result of some news, a breakaway gap essentially means that the market has changed its mind about direction. And that little hole in the chart that you see, if I zoom up here, that right there, if that's not filled, in other words, if the price does not come back down to fill that little hole, fill that gap, it's a very, very bullish bit of price action. So that's kind of what we're looking for in terms of a setup, a market that's very, very much oversold. It has gone down for preferably 6 months to a year, and it begins to deaccelerate. Not looking for any specific bottom, we're just looking for a deacceleration. Then we want to see that market begin to go sideways. Not a lot of upward momentum, not a lot of downward momentum, just chopping sideways as we see here in Bank of America. And so this is a buy signal. This is essentially the market saying that it's changing its mind about the direction of that stock, and that particular stock has the chance now to form a longer-term uptrend. This is really not a swing trading concept. It's not a concept that you would implement with anything other than a position trading mind, looking at probably a 2 to 3 month time horizon in terms of holding period. So there, it's really pretty simple. Again, one of these things where if you have to ask questions about whether or not it is a low-level base, it probably isn't. We can take a look at some other stocks that are out there that are kind of exhibiting this pattern but haven't yet fulfilled. Obviously, GM, another major weak stock that's been in the news. If we squish down here, we can see it qualifies, having sold off pretty radically. But if we look down here, we're seeing the deacceleration phase where the market is making new lows, but not really following through much to the downside. However, we don't have that base, and we don't have that coiling action, that pause that delivers that buy signal. So a good example there of perhaps a stock that might be bottoming in the future, but hasn't shown that price action yet. Great example of the filtration that the low-level base gives you is GE. Now, GE is a stock that I've believed in for a while. In other words, I believe that this market's going to come down and give a generational buy point. And I really did think, opinion-wise, that generational buy would be right around $20 per share. So when 20 kicked in, we had all the qualifiers. The market had been down for a very long period of time. It began to deaccelerate and was just waiting for that low-level base to form when a big new sell leg came in and essentially disqualified that as an opportunity. Again, once again, looking for the higher low. The higher low didn't form. It began to base a little bit, but not long enough to really qualify as a low-level base, and then a new low formed. Now, we're almost a year and a half later, and I've been following this stock pretty consistently. We don't have the higher low, but we do have a break to new lows, and now a long, sustained low-level base, which I think will offer a nice, really investment buy opportunity in GE. So GE on one side and Bank of America on the other are two trades that I think are looking pretty nice for the next couple of months. Let's go ahead and go to an actual trade that has already resolved itself based on the same principle. And you can see here we have MIDD, M-I-D-D. Stock's been selling off again, qualifies, having sold off for a year or more. Selling down to new lows, and it formed this breakaway gap to the upside as a result of some earnings news. And you can see here how that brought us, if I bring out a trend tool, brought us right back to this upper level base. And you can kind of see, if I draw another line, how that little coil formed for several days before for breaking out to the upside. And then, of course, you can see the follow-through that occurred after that energy was released. And that's really what this is all about. This is about the removal of downward inertia, which initially gives us that pause period, that base near its lows. And then as the market breaks to the upside, we see all that bearish energy released now in the form of bullish energy, which takes us back, hopefully, into a new steady uptrend. So there you have it, a couple of ideas, a new pattern for you to look at, and some actual examples to look forward to trading if they qualify in the future. So there you have it. As always, if you want more information, www.tradingaintpretty.com is the name of the blog, yoder.com, the name of my website. You can always go there for more information, or email me, info@yoder.com. So thanks for listening. My name's Bo. Good luck and good trading.